Perfect. All right, welcome everyone. Super excited to hear some awesome ideas from some very experienced and knowledgeable investors. The format of this call today is going to be each person gets 3 minutes to chat about their idea. While they are chatting, we are going to be live commenting questions, reactions on their Yahoo Finance post, and then we will discuss those questions live and hopefully get a lot of really good feedback for these posts. So first off, quick introductions. Marquis, why don't you go first with just who you are?
Sure, yeah. I'm Marcus Blank, and I've got a couple of businesses. I run an investment management company in Minnesota called Blank Capital, and I also have a side project that I just launched called Small Cap Newsroom. So we're covering kind of the micro cap, small cap world. Just launched a website and a newsletter. So my passion's really in that small cap space. So looking forward to bringing some more of that insight to the Yahoo Finance community.
Amazing, love that. Shailesh, how about you go next?
Oh yes, my name is Shailesh Kumar, and I have been investing in small cap value space for a long time. I used to run Value Stock Guide earlier, and now I have started Astute Investors Calculus. It's a newsletter, it's a membership site, a platform, but the focus is still the small cap value.
Awesome.
Great.
And Sami, how about you?
Yeah, sure. So we based in London, run a small hedge fund. We call it Helix Research. Me personally, 26 years as a equity investor right now, and Helix started about 2021, based on the fact that we are looking at two types of companies. One that is genuinely value, and the other one that pretends to be value. So what we do is the one that's of value, we take long on them. One that pretends to be value, we go short on them. And at a core behind this thesis is called Ecoeconomics, the books that I wrote. It's based on a structured mechanism that you're looking for companies that kind of generate value, not just to their shareholders, but to a larger community and the planet itself. Okay.
Very, very good.
That's us. Yeah.
Wonderful. All right, so let's jump right in. I'm going to go ahead and share my screen, and let's start with Shailesh because I've got yours up. The link to yours up. I will start a timer, and at 3 minutes, I will do this where I click this button, and it will show a bunch of these reactions to let you know that you are ready to wind down.
Okay.
Marcus and Somi, if you could also pull up this post, it's in the, Shailesh put a link to it in the chat. And if you could live comment any reactions down here while he's talking, that would be great. But yeah, Shailesh, go ahead and take it away.
All right, Nathan, you're going to scroll for me.
Sorry, up here.
Okay, so I'm going to be talking about Graham Holdings Company. I said small cap. This is kind of a mid cap stock. It's about $4 billion in micro cap, in the market cap. I think we all actually know Graham Holdings, even though it's kind of outside of our radar. This company used to be called the Washington Post Company. And this is the leftover after the Washington Post newspaper was spun off and sold to Bezos. That happened in 2013. Catherine Graham, which you, of course, if you follow Warren Buffett, you know, who was a good friends with Warren Buffett, ran the Washington Post Company for a long time. Then Donald E. Graham, her son, took it over. And today, this company is managed by Tim O'Shaughnessy, who is the son-in-law of Donald Graham. So in a way, it is like a family-run business. The company, after the newspaper was sold, has evolved into a holding company, kind of like a small conglomerate, much like Berkshire Hathaway. So today they own Kaplan, which is a big educational services company, testing, etc. They own Graham Media, which owns a few TV stations. They own Graham Healthcare. They own a few auto dealerships, some manufacturing businesses, etc. They own a media company called Slate, and they also own a journal called Foreign Policy. So I think it looks like a very eclectic group of businesses, but they have been doing a very good job of squeezing profit margins out of these businesses, and they're also very actively acquiring and disposing of businesses as it makes sense to do. In terms of valuation, I looked at this as a sum of parts valuation. And so to me, I broke it down into like, Nathan, if you can scroll, I can show you the different groups. So I broke it down into education, auto, broadcasting, healthcare. These are the four major segments. And like thinking is, if this gives me enough value, I don't really need to consider the rest of the smaller parts.
Mm-hmm.
And so then I looked at this and I did a free cash flow multiple valuation and compared it to the peer group for each of the segments, right? So for education segment, I look at the peer group in the education sector. And with that, I came up with a total intrinsic value of about $6.8 billion. And to me, this is like a significant discount to where looking at where the stock price is today. And so, okay, it's a good entry point for an investor to get into this stock because you have a big margin of safety today. But I also think that based on the pedigree and based on the management ability and their history, this can be a really good long-term hold, just like Berkshire Hathaway used to be. And of course, we all know Warren Buffett sat on the board of this company for like 37 years or so. So, they're pretty much in the same mold.
Very good. Thank you so much, Shailesh. So I was doing some commenting. I know it. The other two of you were also like pulling up other things. So I don't know if you were able to get your comments in yet, but definitely add those comments. This is the first time we've been doing this, so I'm wondering, would it make more sense to address some of those comments now, or should we make sure each of you talks first and then circle back to the first one?
I think some of the comments, like you asked how long I've been holding, it's about 6 months, so it's recent. So I can just tell you that now. But some of the other comments, I may have to think about it, and then I'll get back to you offline.
Perfect. All right, so let's move on to Marcus. Thank you for putting the link in the chat. I'll share my screen here, and let me pull up on this other side. One moment. Okay. I'm on the right tab. Okay, so Marcus, would you be ready to start your pitch overview?
Sure, yeah. Thanks a lot. So today I want to talk to you about a microcap idea. It's effectively sole source monopoly hidden in plain sight. So this company is Optex Systems, OPXS. And here's the simple premise. You can't build a US Army tank or fighting vehicle without this company. So they manufacture the periscopes and sighting systems for the Abrams tank, the Bradley fighting vehicle, and the Stryker. They own the eyes of the US Army fleet, essentially. So Despite being critical to national security, it trades at a market cap of about 100 million. So it's a small company, pretty thinly traded. The bull case, so I think of three catalysts. One, it's a sole source moat. So Optex isn't just a supplier for many parts. They are the only qualified supplier. So qualifying a new vendor for laser protected Optex takes years and millions of dollars. So they've got a regulatory and technical moat that gives them stickiness with the programs. As the U.S. Army modernizes to the Army of 2030 with the M1E3 Abrams and the XM30, Optex is already winning contracts for these prototypes. So the second part is the geopolitical supercycle. We're in this period of renaissance of armor. So with the ongoing conflicts in Ukraine, it's triggered a global restocking cycle. And Optex is seeing orders not just from the US, but from foreign military sales as well. Backlog has expanded to 45 million, and that's a record high. So they've got plenty of runway here going forward. And then a margin inflection. So Optex has high fixed costs, but low variable costs. So as revenue is scaling up over 30 million, their margins expand pretty rapidly. So they just hit mid 28% in Q3 2025, and they're debt free. So cash flow goes right to the bottom line. So yeah.
Sorry.
Bear case, customer concentration. So that's the biggest risk. About 90% of the revenue is tied to U.S. defense prime contractors and the government. If the DoD decides to cut land vehicle funding to pay for ships or planes, Optex will take a hit from that. Liquidity and size is another risk. So it's a micro cap. Average volumes around 25,000 shares a day. It's hard to build a large position, so funds can't really enter a name like this. And then recently there's been some turnover at the top. They've got a new CEO on board. There's been some insider selling, but that's been part of a planned approach rather than dumping shares. So I think right now this is about fairly valued. I entered Optex earlier this year when it was about 5 to 6 a share. It's been as high as 19. I think it's around 15 today. So it's been a pretty good investment. So yeah, that's all I have on Optex, and open for questions.
Awesome. Okay, and great on time. I was just about to do that. So I'm going to refresh my page and
I've just added some comments there. Yeah.
Perfect. Why don't we do maybe we'll do this. Marcus, as you scan the questions, maybe just answer one, and because some of them are, maybe take more thought, but if there's an easy one to address, especially one of Sami's, then we can move on to Sami. So let's maybe do that.
Yeah, so let's go. Key risk if there's peace and quiet everywhere. Yeah, definitely that's kind of a good risk, I guess, how you want to, depends on how you do that. So yeah, that's definitely a risk. I think with the new defense budget of the current U.S. administration, I don't think there's any shortage of funding in the pipeline in the near term. So, but long term, yeah, hopefully that's the case.
Yeah. Yeah, I find it darkly funny that peace is a risk, but in the business context, that is a good observation.
Yep. Absolutely.
Great. And just another quick note. One of the reasons why I'm commenting, just like a quote you said, this isn't really a question, but it is, it's like, something that stands out, something that if, when you're on Yahoo Finance, there's a lot of value to having these longer posts, and by longer, it's not even that long. It's a 400 words.
Like 1 page, yeah.
Yeah, but the way that consumers consume content is they notice there's quality here, but they probably are only skimming or not reading closely. And so comments like this, where someone just sort of mentioned something that stood out to them, is helpful to other readers. It draws attention, like, oh, someone's paying attention. It gives them like a reason to read it more. And we will be launching a new popular feed. And I will show you real quick. Here's the community right now. It's loading. We have the new feed. There's going to be a popular feed. And automatically, if you've been featured, your post will go into the popular feed. And the popular feed will be by most recent comment. So other posts have to get at least 5 comments to make it into the popular 10 upvotes. Yours get in there automatically just because it, even if it doesn't have any comments or any other. But then it will get sold to the top every time that there's a new comment. So just by doing these quick comments, it helps it bring it back up. So basically what I'm trying to do is like help each other out, right? Like Shailesh helps out Marcus by just like commenting every once in a while. That says up the same. My motivation is I want you guys to be the most prominent. I want you guys to show up because you are great work. The problem, and you're already kind of aware of this, we'll jump over to like DJI. If we jump over the Jones Industrial Average and we look at the community over here, most of the content on Yahoo Finance from the community is just, you know, short, not very good content. Like this is really not that valuable, that one. So as we roll out higher quality content, we want people like you popping up top of the feed and not this stuff. So hopefully that helps explain also why I'm encouraging comments like this.
Right.
Yeah, very helpful. Yep.
Cool. Okay, so on to Sami. Let's pull up your post. There it is. And shared tab. And all right, Sami, the floor is yours.
Okay. In the current sort of economic situation, basically the global economy is slowing, declining sort of a situation, and the US numbers, basically the leading numbers aren't very encouraging. So what I look at is there are a few things that people will still do even if the economy is bad. They will still buy food, they will still be paying rent, they'll still be paying mortgages, they'll still be paying their gas bills and whatever, gas and electricity, whatever. So it kind of feeds into that necessity trade, and that then boils down to saying, okay, can I maybe save a little bit by going to a discount retailer, right? That's where Dollar General kind of fits in, right? There is basically an upbeat sort of a thing in the market because the recent EPS estimates were better than expectation, and people say that basically the turnaround is working, etc. Now, the way I kind of look at this is things only work when you have basically a wide moat and you're able to capitalize on that moat. Here is a company that doesn't have a wide moat, first of all. If you just look at the free cash flow, it's increasing, and basically many analysts say fantastic stuff about this. But the idea is free cash flow alone can be spent very easily, right? Next quarter, it can be gone, right? Or in about a year, it can be gone. What sustains that is free cash flow with an equivalent return on invested capital, right? The cash flow is growing, return on invested capital is also growing. Then you know for sure that this is definitely a pretty good moat. Here, what is happening is that's not the case, right? There is a drag on the return on invested capital. That's what I wanted to highlight first of all. But then you then look at what is happening at the back in terms of the operations of this company. they paid fines to OSHA. Many violations. Many of these violations are silly violations, like blocked fire exits. How silly can that get to for somebody who's operating so many stores, right? So I tend to look at these and say, is the management really efficient? One side is efficiency, the other side is effectiveness, right? While the numbers look efficient, the effectiveness seems to have been lost over here, right? The other part that I also looked at is, they claim to solve the food deserts, but what sort of food are they serving in those food deserts? It's highly processed junk, and they're it's basically convenience at the expense of public health, right? That's pretty much our sort of assessment. So we tend to take even though we find that the stock is fairly valued from a market perspective, it's unlikely to be of long-term value. So we're taking basically sort of, I can say, fading the rally sort of a stance here. So we're shorting it basically. Yeah.
Wow, great. Thank you so much for that pitch. I selfish like quick question, but let's jump. I saw Marquis had some Marcus. Sorry, Mark. I keep on your name, and I know you told me before that people do that all the time, but I apologize.
All good. Yep.
But yeah, let's Sami, if you want to take a look at some of the questions, Marcus.
Yeah, definitely. Yeah. ROIC often overlooked. Yeah, that's correct. Still buy food. Yeah, exactly. Even when the economy is bad. The spread between the ROIC and weighted average cost of capital, I can look back at that, but I think largely what is happening here is that they are basically squeezing the juice out of that business, not really growing it. That's the message that we're getting here.
Got it. Yeah, that makes sense.
Yeah.
Thank you.
Yeah.
I'm commenting this right now, but are you also bearish Dollar Tree for similar reasons, or no opinion because you were looking specifically at Dollar General?
We're looking specifically at Dollar General because it kind of comes out as that specific beta range at which we want to trade, right? Dollar Tree doesn't actually fit into that beta range, at least right now, right?
That's a great answer. Thank you. And I guess another quick pro tip. So I just commented that are you bearish Dollar Tree for some reasons? And you said no. The pro tip would be, in a couple days or in a week, if you go back and you answer my question at that time, it'll shoot your post up to the top of the popular feed. So you don't necessarily need to do it now, but you could strategically like go do it later to resurface it.
Sure.
Cool.
Got it. Yeah, I like it.
Cool.
I like that. Yeah.
Was there Shailesh asked, how does this change into we go into a recession? Any thoughts on how a recession could change your thesis, or any thoughts there?
I think if it, I think the likelihood of a recession has been there all through the year, right? Almost the entire year, we've had the likelihood of a recession. Will we go into a recession? We don't know as yet, right? But if we do, then these necessity trades are the ones that are likely to win, right? Like Dollar General, Dollar Tree, Walmart, for example, right? These are the ones that are likely to win, because what people tend to do is they tend to cut luxury spends. First cut luxury spends, then cut anything that is discretionary, and then go into if you're still looking to cut, then instead of your usual weekly shop, you try and look at discount retail as an option, right? And as such, we don't have a lot of faith in the unemployment data at this particular point in time. I've always said, basically the US produces a lot of data, not necessarily good data, but right now we've got to a situation where the data can't even be trusted, right?
Right.
That's where we are now.
Yep.
Very good. Well, I want to say a quick thank you. We are pretty much at time. This has been super successful from my perspective, because, hey, you've met each other now. Make sure that you're all following each other on Yahoo Finance. My hope would be like y'all could ask each other for favors in the future, or hey, here's my new post that's out. You all are growing really interesting and high quality publications. And so I'm a huge fan of y'all. I want you to succeed, and let's keep growing this network. If you have any suggestions, new ways to run this type of conversation, I'd love to do more of these. Each of you bring you up with more different people or the same people. Like, I'd love to. So big thanks. And I do got to run to a meeting. I wish I didn't have a hard out, and I want to respect your time. If you have any feedback, shoot me an email, but would love to do this again in the future.
Yeah, same here. Thanks a lot.
Awesome. Thank you for having us. Thank you. Bye.
Thanks for connecting us. Right.
Yeah. And thanks for being here late on a Friday night from London. So,
yeah.
See ya.
Thank you. Bye.